Hello and welcome to today's video. Now in today's video we'll take a look at the news which will be affecting the market as a whole. Apart from that, we'll take a look at HCL Tech, Tech Mahindra and the Nifty Midcap. I'll take a look at the two stocks via equity for equity traders and option traders too, and Nifty Midcap will be taken a look at for basically what traders can do with it for this expiry. Now before we go into all that, on the news front, this week is a very data heavy week and news heavy week. This is the markets have got so many things that are going to affect it, so I expect a lot of up and down moves and they'll be pretty severe. They'll be pretty severe, then they'll be pretty stagnant. Pretty severe, pretty stagnant I expect. That's sort of a pattern to form. Why? We have the US presidential election this week, so that is going to be not only affecting our market, it's going to be affecting every sort of market, whether it's bonds, crypto, forex, commodities. It's going to affect everything. Then there's a Fed meeting from November 6th to 7th. Everyone will be watching whether they give a rate cut, as the market is expecting a 25 BPS rate cut. But now I believe the Federal Reserve Chairman and the members will be in a bit of hot soup. This time they have to balance the economy and the politics of the election. So it will be interesting to see what they do. Plus, in fact, more interesting than the rate decision will be the commentary they give. After that, then the Bank of England also has its rate decision, Chinese trade report. Then we have results of major companies, whether it's SBI, M&M, Tata Steel, Tata Motors, Titan, RSCTC, to name a few. So this is a very data heavy and news heavy week, so expect a lot of volatility to come in, especially from midweek. Then also one other thing which I believe which will affect the market this week is the change in brokerage charges. As I believe everybody who has accounts with several of the brokers, last night for example Kotak had sent an update of the intraday brokerage charges and everything. Now I believe that will have a dampen effect, because now we are preparing for all the rules that are going to come in across November. But by November 18th, lot size is going to increase, margin is going to increase, and I expect the trading dynamics to have a huge change, and we'll have to see whether the change is as negative as is expected to be, or it's worse than that. It is going to be negative change. There is no change right now that is coming in that is actually positive for the markets. Whatever they say, it's the investor protection and all, that is rubbish. None of this is going to actually help investors. It's actually going to, I believe it's going to make option traders who are losing money lose even more money than they are, because the Nifty is the index that stagnates. So them keeping that and removing the bank Nifty will end up causing more people to lose money with the higher margins at a higher rate. So that's how I see it going. Now that's it for the news. Let's move on to the stocks. Now I focused on the IT stocks this weekend rather than usually view most videos. When I look at stocks, I look at from different sectors, but I've looked at the IT sector, as the IT sector has sort of been the savior for the index this month, I would say. If we look in October month, even September, the index, whenever it has fallen, there is one sector that has held its water, which is the IT sector. However, last week we saw the IT sector also start showing severe signs of cracking. So according to me, if the IT sector can hit certain levels, then there will be much bigger trouble in the headline indices than what has already been there. So that is why I'm looking at the IT stocks. Even in fact, tomorrow's article on investing is looking at TCS, and today I'm covering HCL Tech and Tech Mahindra. Now, according to me, Tech Mahindra right now, it will be very important to see if it is able to hold the supporters towards 45. This is, I believe, Tech Mahindra will be forming a box range between 1745 and 1850. But if it breaks the support at 1745, then we can expect a quick drop to 1700 and then a quick drop to, if it breaks that, 1445 to 1660. This would be a very important support, as if this goes, then the weekly picture changes also. This is right now, this zone only affects the daily picture. But if we break this support, the weekly picture also changes, and it goes from being neutral in weekly to being bearish in weekly. So the HCL Tech is in a very peculiar spot due to that. So if you're an equity trader, I think right now you should not even consider HCL Tech anywhere near your portfolio. If you're holding it and you're in profits, take your profits or put a very tight stop loss. If you're looking for a new buy, this is not worth it. Let's say even if it holds 1745 and stays in this box range, your max reward is to 1850. And if you look at that in terms of risk reward, that is peanuts basically. You're going to be basically, let's say you get an entry roughly here, so you're going to be making about 3% profit max out of the whole move. So it doesn't make financial sense. You'd rather go look for other equity buys, which will give you much more than that over, let's say, 2 to 3 weeks. Now, this I believe is an option trader's delight. You can be an option buyer and an option seller if it breaks 1745, as it's a short to 1700 via option buys, and it breaks at 1645 to 1660. Or by option sells, if it breaks 1745, you can literally sell calls above 1745. Oh, if you want to be less risk averse, go and sell above 1800. So both options are there for F&O trading. So HCL Tech right now is something F&O traders should look at and equity investors should run away from. That's what I believe. Next, we're going to take a look at Tech Mahindra. Now for Tech M, this is just simply denoting the low of the candle. This is not an important support, 1603. Now how I'm looking at it, Tech M will be trading within a box range of 1670 and 1530. So as long as it's within this range, don't expect a clean move. Expect sudden drops and sudden rises to continue, as it will be trying to decide a decision. This is as whether you look at the Nifty IT index, whether you look at the big stocks, Tech M, TCS, HCL Tech, Wipro, Infosys, all are at an inflection point on the weekly charts. All from bullish have gone to neutral in the weekly charts. Daily are bearish, weekly are neutral. So how they play out the coming 2 to 3 weeks will determine, I'll say 2 weeks will determine whether they go full bearish even in the weekly. So for Tech M, as I said, as long as it's between 1530 and 1670, it's a box range move, you're not going to get anything. I personally have already sold calls and also sold puts. This is one stock. People who have been watching my videos know I rarely sell calls and puts both. I usually like to sell only one side. I've ended up selling both sides, calls and puts, and I'll be looking at how it balances out in the coming trading sessions. Now on the option buying side, you'll only get a clean move if it breaks 1530 or 1670. If it breaks 1670, then it's a small move to 1725. On the downside, if it breaks 1530, you get a clean move to 1450, which is a bigger move for option buyers. But within the zone, option selling is preferred. For positional intraday, you can do option buying, but positional, only stick to option selling. Don't think you're going to do positional option buying here and you're going to make a very good profit. It's not going to happen. Equity traders, again, Tech M, avoid it, let it sort itself out. There is no point of entering it and suffering through a box range like which happened here. Take your money elsewhere. There are better stocks out there. It's not worth the time and effort to invest in it. Now on to the Nifty Midcap Index. Now a lot of the levels of the Nifty Midcap are like the ones we've used last week and then the week before. Slight change to one of the resistance levels, but beyond that I've not changed anything. This is working perfectly. Now the Nifty Midcap, due to this being a very heavy news week, nothing can be clear, and due to that expect up and down moves within the range. This is the market will be trying to gauge where it should go. There will only be a clean move if the Nifty Midcap were to break the support of 12,200 or the resistance of 12,520. If this is between 12,520 and 12,200, it's going to be trading within a box range. If it breaks this, then it will be going up to 12 by 650. Not a huge chunk, but at least it will be a clean chunk. If it breaks 12,200, then we can expect a fall to 12,050 and 11,920. So my trading plan is simple. Between 12,200 and 12,520, I'm going to trade both long and short. As the trade comes, I will drop to roughly 3 minutes charts or 5 minute charts, and I will trade it depending on that. But if it breaks 12,200, then I will be able to buy an option or do an option buy, for example, which will let me earn as it goes all along down towards 11,920. If it breaks 12,520, get a clean move to 12,650. So that's my option buying. Trading plan is as simple as that. What's my option selling trading plan? Now for option selling, I am going to be very cautious this week. Why? I expect this week option sellers to get hammered in intraday at times because of this heavy news flow which is going to be going on. It's going to accelerate as the days go along, and there'll be random spikes coming up which people will then blame on something or the other, but it will be simply technicals getting affected by news. Now, due to that, I am going to play, if I usually deploy 100 rupees in option sales, I'm going to deploy 50 rupees only. And I will sell this expiry. I'll be selling both calls and I'll sell both and puts. Now, if you're an aggressive option seller, then you can sell calls above 12,520 and puts below 12,200. If you're cautious, then go and sell calls above 12,600 and puts below 12,050. Now, how I am looking at it, I will most likely do a mix of the two, but it will all depend on how we open. If I see we are opening around this spot, then I will go aggressive on the call selling and cautious on the put selling. But if we open, let's say, a smack dab in the middle, then I will take complete cautious stance because it can go 50-50 anyway, and I don't want to burn myself. Due to there will be a sideways volatility coming in, so option sales will even expire faster than they usually do. So keep a profit stop and let the profit stop take you out of one side if one of these sides of 12,520 or 12,200 breaks. So that's my trading plan for Nifty Midcap Expiry. No trading plan this week is going to be cut and dry like it always is, that I'm going to do this and it always works out. It's going to be a bit of adjustment due to the news heavy week. That's it for today's video. If you liked it, then hit the like button and subscribe to the channel and hit the notification bell. Thank you.